James back with a video on Carnival Cruise Lines, ticker symbol CCL. The reason I'm doing this video is Carnival is back. They are a spit and image version of their old self, practically, and we're going to take a look at this. 9.73 cents a share today, $9.73. Let's just get right to the numbers. You see a story of a company that's doing $20 billion a year, $19 billion or $21 billion a year, and then COVID hitting and nobody wanted to take a cruise. The next year, nobody was allowed to take a cruise. Keep in mind, everybody just doesn't want to get locked on a boat for a month out floating out in the middle of the ocean. They lost $10 billion and $10.24 billion simultaneously, and they lost another $6 billion in 2022 on just $12 billion in revenue. So their 22 revenue was horrific in comparison to their old glory. So this stock has just been destroyed. But I want you to take a look at what's happening. Their quarterly revenue is going up and up and up and up and up. And currently their quarterly revenue sits at $4.43 billion, which throws them right up to $17 to $18 billion a year in revenue, which is their old glory. They're almost here again, folks. Just a couple of billion off of this $20 billion again. They're not at $12 billion a year anymore. They're at $18 billion a year. So they're back into this range and full ships in business. And for that reason, I want to take a look at this stock in 2019. I want to see if it becomes this company again, what we should expect from this stock price. So we're gonna what year are we going back to? 2019. Yep, we're going back to 2019. So let's take a look at the stock price in 2019. You got to go to a 5-year chart. 2019. We're staring at a $60 stock, $50 stock. Are you with me? So this company at this revenue, pulling a profit that's normal, $50. Price of it today, $9.73. You saw a huge upward momentum in the last few days, I believe. No, down 5% in 5 days, up 0.72, down for the month, up 52% in 1 year. People could see that it was, or in 6 months, up 52%. Year to date, down 47%. It's a good time to scoop up a few shares of this thing. Can they wake up and say that, all of a sudden be a $20 billion a year company again? They're already there. They already have the ships. They're filling them up again. It's just a matter of time. In a recession, people are still going to take cruises. All the rich people are going to be cruising like crazy. Those are the people that cruise like crazy anyways. I don't think the general minimum wage worker that's going to be struggling is taking as many cruises as cruise people do. I think this is an insulated group. It's not Walt Disney World. They only need to sell 1,000 tickets and they have a cruise. So it's kind of like a rock concert in that regard, but with a whole lot less tickets. So yeah, the price has not recovered back anything towards the semblance of the former company. The balance sheet says that they are right side up annually. They've managed to hold it together. The quarterlies are all staying consistent. They haven't added more ships. They haven't removed any ships. The annual says the same thing. They haven't sold any ships. They've probably maybe acquired a ship here. I don't know. But even their balance sheet through 2020 and all this, they added up a little bit more debt. And they did. They ran into some more debt because of this. Their debt is $44 billion for a company that does $20 billion a year in revenue. That's a lot of debt. Let's see how much debt they had back in 2019. Income statement, wrong one, sorry. In 2019, when they were rocking and rolling, they had $19 billion in debt. So they have double the debt they had when they put up these awesome numbers in 2019. that brought them to that stock price, their last good year. So is it going to look like this? No. It's not going to be 2019 repeated. So it's not going to be no $75 stock unless they do something with the debt. How much cash do they have? They have $4 billion in cash. I would strongly suggest they throw a couple of billion at these liabilities and start chewing these things down as fast as possible. They should be able to hit the profit zone again now that the revenue is recovered. Let's see how close their profit is to being recovered. Quarterly income statement, it's shrinking. They only lost a little over $500 million last time, up from 1.6 billion. That's getting better as this revenue goes up. It's getting better. I think the peak of their full ship life is somewhere in the low 20 billions. So I couldn't imagine that they have, unless they raise prices, they can get over that. And then there is higher costs on personnel. There's higher costs on gasoline to run the ships. So yeah, and it might be in the right place right now. I'm not really sure, but it could very well be worth $30, $40, $50. Is it a good investment? I would say heck yeah. Cruises aren't going anywhere. People love to take them. During a recession, after a recession, the people that are going to take them are going to take them. This is your vacation for the year. People are still going to take vacations for the year. There's literally not enough tickets available for them not to be able to sell them out with marketing efforts. Companies can buy 100 of them all at the same time. So they could almost fill up a ship, just one company, taking their people out for the super cruise. Carnival Corporation, headquartered pretty much worldwide. They were either officially or not officially in the United States during COVID. I don't know where they claim to be located today. Bahamas, all over the world, ports everywhere, lots of ships. They didn't lose any ships during this debacle. They made it through and they got their revenue back. And for all those reasons, I think Carnival should be going up, not down. So take another look at Carnival. I think you'll like what you see. Please like my video and subscribe to my channel. Have a wonderful day. Happy Easter.